Welcome to my YouTube channel. This is the Captain Ngala. It has been a long time, but we are back. We are back with another video, and we'll be continuing with these lessons as time goes. Today there's something very special I want to talk about because I've realized that these simple things in forex are what are making people to blow their accounts, not even the signal they have been given, or not even their market analysis they have been given. You get that somebody has got the best technical analysis or fundamental analysis, get the market is in your direction, but because of using the wrong instruments or the wrong leverage and margin, you're going to blow that account only at the pullback, which is very unfortunate. Because you don't expect the market to go on a straight line. The market must have a pullback or must have a rest. Anything must have a rest in this world. Now the market also, sometimes the market rests. That one is the pullback we're talking about. But you get that some people just blow the account at the pullback, exactly at the pullback. Then the market goes in their direction. That one is what we are talking about. And the first thing we're going to talk about is the leverage. The leverage that people use. Because you get that some people are just creating account with the broker and they don't know what they don't know which type of account they have created. They don't know which type of leverage you have used. They don't know whether they have created a MT4 or MT5 account. uh, they don't know whether they have created a swap free or swap account. We'll be talking about all those things for us to get the tech. For us to get the core of trading, you have to know these things, because some people just blow the account only at the pullback before even the trade starts. Now we are going to talk about what we call leverage, and leverage is very important. What is leverage? I want to make it very simple as possible, so that you can get it from me. We will not leave anybody behind. Leverage is the use of borrowed money. Is the use of borrowed money. We'll type. Is the use of borrowed money called the capital. Called the capital. It is the use of borrowed money called capital to invest in the stock market or security. To invest in the currency, stock or security market. Now guys, this is what we call leverage. Leverage is that very simple, the use of borrowed money. The use of borrowed money, this size is very big. Let us reduce this size. Oh yes, let us make it 20. The use of borrowed money, it is just generally the use of borrowed money to invest in currency, stock or security. In a layman's language, very simple language, because now we are going to talk about the broker. We are going to talk about the very simplified way, because some people will be still asking a question in that given perspective or that given definition. It simply means borrowing money from a broker or investor to create large position in the market. It is just borrowing, take it from me, borrowing money from a broker. Sorry guys, there are very many spelling mistakes, but that one doesn't hinder us from learning. Borrowing money from a broker, borrowing money from a broker or investor or investors to trade large positions in the market, to trade large positions in the market. This is what we are going to talk about, because some people always blow their account because of the leverage they have used. Now, it is just very simple. It is just borrowing money from your broker so that you can create large positions in the market, because let me say you have a small capital, which means you can't create a large position in the market. Let me say I have 100 USD account, but I want to create a position which in the market worth 100,000 or a million, or even $1,000,000, $100,000, or $1,000. How will I do this? I will only do this through leverage, through selecting a leverage from my broker. Selecting a leverage from my broker. Different brokers offer different types of leverages. There's brokers which offer leverage from 1:5. From 1:5, there's a leverage of 1:50. Even 20 is there. 1:20. 1:50. Sorry, 1:50. There's a leverage of 1. Sorry, guys. There's a leverage of 1:100. You will get a leverage of 1:100. You will get a leverage of 1:1,000, or even 1:500. Like I see FX Pesa offer a leverage of 1:4,000 to 400, which is the biggest leverage they offer. We have leverage of even 1:800, even 1:1,000, which is a very big leverage. 1:1,000. Then there's a leverage of 1:2,000. Alafu, then there are people who offer what we call unlimited leverage, which means they can leverage you to the amount you want, but there are terms and conditions you have to meet for you to be given that type of leverage, for you to be given unlimited leverage. I see companies like Xness have got unlimited leverage, but you have to you have to meet some certain conditions for you to get that given, or that type of given leverage. Now, guys, there are people who have been asking me, the Captain Gala, which type of leverage should I use? That one is what the reason why, the reason which has motivated me to create this kind of a video, because of the people coming to my inbox asking me or requesting me to show them the type of leverage they should be using. This is my advice for you. The type of leverage for you to use, it depends with the trader, and it also depends with the broker, because there are some brokers which offers even up to 1:2,000 leverage. There are some brokers which offers even up to 400 leverage, and there are some brokers which offers even one up to, and there is unlimited leverage in the market. Guys, this is my advice to you. This is my advice to you guys, and I would love you to take it from me, because this is where we are going to talk about it, and there is nowhere we are going to talk about this again. And if you wanna know it, don't DM me. You can come and watch this video. That is all. For you to know the type of leverage you wanna use, first you have to know, do I want to risk this capital I want? Because the more the leverage, the more the risk, and the more the return. Let me say, if somebody creates takes a leverage of 1:1,000, you will get that this market, this guy or this trader is risking a lot in the market than somebody who has got a leverage of 1:5. You will risk a lot in the market, and the return might be very high, but also you can even lose your money into seconds in the market. These are the people I always say that they always lose their money at the pullback when the market is at rest, because somebody used a leverage of 1:2,000 which he or she did not know. You get that you're going to blow your account at the pullback of a market. You are going to blow your account at the pullback even before the trade starts. Now, my advice to you, it depends on what you want in the market. If you're not sure with the direction of the market, don't use a bigger leverage. And if you use a bigger leverage, use the smallest lot size of that leverage. Use the smallest lot size of that leverage. And I repeat, use the smallest lot size of that leverage. And we're going to take a look at the example. Let us look at the example. Let me say someone had a capital of, let me say somebody had a capital of 1,000 USD, 100 USD, sindio? Let me say somebody had a capital of 1,000 USD, and this guy is trading Euro USD. And Euro USD, this guy is trading it is on a sell. This guy is selling Euro USD. Sell Euro USD. And the entry point of this person, let me say it is 30.55 to take profit. The take profit, let me say, is something like 1.3. Now, this guy was selling Euro USD. Entry is this. Take profit is this. Then, let me say this guy had a leverage of, let us use leverage of 1 is to 500. Yes. Most people use this kind of leverage, 1:500. Now, this is what you do. When this guy use a leverage of 1:5,000, which means this guy can create a position in the market of a lot of money. Of that one will be, you will multiply 500 times 500 times 1,000 is equal to 500,000 USD, which means this person, this trader, let us call him a trader or her trader, this person will trade up to 500, can create a position of 500,000 USD in this given market. I hope you understand. It means that you can create up to 500,000 USD in this given market. And how do you get the profit? Let us say you created a leverage of this, and you create a leverage of, you use a leverage of 1 is to 5,000, 1 is to 500, and your capital is 1,000, and we know very well that you can create a position of up to 500,000 USD in that given market. What we are going to do, we are going to get the pip difference. I mean, what is the pip difference? Now let me say this one is this one minus, enter. It is going to be a minus sign, which is 1 is to 5. Now what we are going to get here, let us use this trend line. If you subtract this, let me just use an indication for you to know. If you subtract this from this, you are going to get there is going to be 0, here is going to be 5, here is going to be 0, 0.0. Now it is going to be 0. Now the subtraction is going to be the pip difference. What is the pip difference? Pip difference. I hope you understand, guys. If you don't understand, you can keep rewatching this video. Pip difference is 0.0050, because you created a position of up to, you created a position of up to 5,000 in the 5,000 USD, 500,000 USD in the market. You are going to multiply 500,000 times 0 point, which is the pip difference. You can multiply with me if I'm not wrong. 0.00550 times 500,000. It means that what you're going to get in this market as your profit will be 2,500 USD. 2,500 USD, which means you must be careful with this. Now, this is what we're going to make in one trade. It is going to be 2,500 USD that you are going to make. That one will be the value in the quote currency. Your value in the quote currency will be 2,500. We let us name it. It is in the value or in the quote currency. The value in the quote currency. The value in the quote currency will be that. Now, sorry guys. Now somebody will be asking, which type of the margin should I use? Because today I want us to talk about only leverage alone. Now this is my advice, guys. Use, if you don't want to risk and you are not sure about the market, if your capital is small, which cannot hold a trade, kindly first check the leverage. If the leverage is too much, you can modify it, because all the brokers has got a place where you can go and modify your leverage. Even FX Pesa has got a place where you can go and modify your leverage. I will show you where you can go and modify your leverage, either in exam. You can go and modify your leverage in exam. You can go and modify your leverage in FX Pesa. Some people will be asking, how can I modify my leverage? Just go into any of your broker's account, go to account, go to modify, change the leverage. Because too much leverage in the market will make you to blow your account very fast. When the market is at pullback, it will find that you used a lot of leverage. Now, when you use a lot of leverage, the market will just blow your account immediately. Then the market goes into your direction. Very many people blow account not because that they don't know the market direction, but because they used the wrong leverage in the market. Kindly select the correct leverage. Don't over leverage your account because you're going to blow that account. That one is my advice, and take it from me, and don't blow your account again. The next video you're going to talk about, you can comment below. We're going to talk about we are going to talk about the margin, because without the margin you're not going to this video of leverage is not going to help you too much. Now the next time we're going to talk about margin, which is tomorrow. Then after we have talked about margin, you will know now how to match all this for you to be in a good position to trade. I wish you well, because I don't want you to blow your account, because in my VIP channel I always give signal, but you always find some people still blow their account. The reason why they blow their account, because the use of long leverage, amount, which is very bad. Now, this is the last time we're going to talk about the leverage. Go and implement what we have talked about here. Thank you, and that one was my time. I will continue mentoring you in this forex journey, and that one is my duty as the Captain Gala, and I salute you all. Thank you very much.